The broadcast is now starting. All attendees are in listen-only mode.
Good morning and welcome to the Morning Bell. I am Keith Harwood here for Yellowtail and Tradespoon. Reminder, options involve substantial risk and are not suitable for all investors. Tradespoon and myself are not investment advisors, not registered with the SEC nor FINRA. If you do have questions about your own personal financial situation, please consult with a registered financial advisor. The information in this presentation is for education and information purposes only and should not be considered trade advice. And always remember that the presenter of this video, again, Keith Harwood, or the team at Tradespoon may have a financial interest in the securities presented and the trade ideas. So please keep that in mind as you evaluate these concepts for your own personal trading portfolio, investment portfolio, etc. I guess also the idea is that, past performance does not predict future results, of course, ever. We can follow those patterns and look for them to do so. We can't guarantee anything, obviously, but when we look for systems, that have been repeatable for a long history and look for ways to leverage that probability of success. So that gets back into some of our normal trading psychology. The market continues to fight. I was a little bit surprised that the market is okay with Target's earnings given how bad it is overall, but I think more than anything, the market is just preparing for NVIDIA this afternoon. NVIDIA is going to be a big one. If it comes out bearish, the magnitude of move in NVIDIA can be significant. We'll talk through some of the earnings setups with maybe a double fly there. But if NVIDIA comes in with a bearish earnings report, that's going to put a lot of weight on tech. It's, not, I don't know if I would say today it's as important as like the Apples of the world, just because Apple has been the big guy for so long. But it is joining that crowd in terms of importance to the market. It is clearly the biggest semiconductor that I think most of the market looks at. We've had some negative earnings out there, such as AMD. The last real one that we're going to be looking at in a couple of weeks is Micron. But with AMD having been negative and a few other semiconductors being negative, if NVIDIA follows suit and comes in negative, that can have rippling effects. It starts to make for questions about artificial intelligence and some of the tech advancements. And if tech is weak, what can pick up the slack? Ultimately, some of the presidential policy concepts have been pushing towards small caps over tech already. But if we have tech bullish along with those policy concepts, i.e. we have semiconductors full firm along with the normal financials, that can actually really help accelerate this market recovery from this dip, push us to that new high and go into the ho-hum where we're rallying into the end of the year. We'll definitely touch on Target. That is a stock that I'll be completely staying away from, bullish or bearish, because seasonally retail does tend to perform well into the Santa Claus rally. But right now it does not look like Target is the target for that kind of rally, and it may participate. But there are other retailers that look a little bit more interesting right now, particularly given some of the moves that we're seeing in the last 2 days. And maybe that's where the market is trying to focus their concentration. Bull is definitely fighting, though. Definitely looking for ways to buy into this market after the 3 days of testing the lows. Today, slightly firm, but again, getting ready for this afternoon more than anything. And for me, that means that if I'm going to look at anything tech related, it's going to be really off of the earnings plays, and then I'll react into tech tomorrow once I know what NVIDIA does. And it means I might miss the beginning of the move, but usually NVIDIA being the earnings mover, if it's bullish and starts to drag up tech, those can be more muted moves and create some more confidence, and that can create long-term confidence in those names that I can leverage with some options here into the end of the year. Probability of success does look like the upside for non-tech related stocks. The probability of success for tech related, I still believe, is going to be mostly driven by NVIDIA's announcement this afternoon. The return on capital is about the same for tech and small caps. So that means if I can have higher probability of success with small caps without the risk of NVIDIA earnings, that can be my focus. The return on capital being the same, I'll go higher probability of success. If there was higher return on capital, like there is in double butterflies, I can utilize that kind of trade over a higher probability of success, lower return on capital. If you guys have stuff that you want to look at, obviously post that in the question box. And also good morning to those that have said so. I appreciate you guys being on. But I'll get into some of the earnings plays that look particularly interesting to me. Actually, John Deere looks one of the most interesting on the earnings side overall for the next 24 hours. We've got NVIDIA, Palo Alto Networks tonight, Baidu, Pinduoduo, whatever, how we pronounce it, in the morning, as well as John Deere. And we got a number of other stocks that are setting up some interesting return profiles. There really isn't a overall trend right now in the short term. We had a dip and maybe a buying opportunity now. It's looking like a bull flag, mini bull flag. Long-term trend still looks bullish. The allowing of more time definitely comes when we start to see the VIX dropping, and we should see the VIX continue to fall as earnings have really gotten behind us. There is some geopolitical risk to factor in, so we got to always keep that in mind. One moment here. Oh, no, nothing interesting. All right. Yeah, I mean, revenge trading is basically what I'd be doing if I tried to buy Target with the move that it had multiple. I think it was about a 2 standard deviation move to the downside with earnings. That's too much for me to try to load up an idea there. But I can watch it, look for potential ideas of just consolidation into the end of the week. But I wanted to see how the behavior goes throughout the day to see if we find a strike that looks really high open interest that we can really push to for the next 72 hours, allow for 3 trading days of consolidation. That would be a really nice thing for Target. So I will look towards that this afternoon. Unfortunately, ultimately, I'm going to be on tomorrow afternoon. So probably won't discuss it too much other than just to let you know how I'm preparing for it. If we stay at 130, how am I going to look at it versus if we bounce to 135 or continue down to 125, what do I do from there? If we move outside of about $5 from the current price, so if we get below 125 or above 135, it's very much a stay away. There may be, like I said, a target strike for Target here in the next few hours that I can hone in on. In terms of the 10-year yield, we're still in the range here. It is pushing back up. As we approach 4.5, that's going to likely cause some concern if that gets follow through. Right now, we're just in this range from 4.3 to 4.35-ish to 4.5. We tested lows yesterday, bounced back up. Consolidation of the 10-year yield, I tend to believe, is a good thing for the market. It means we don't have to shift major investment themes, so we don't have reallocation that can sometimes lead to liquidation. So if people are pulling out of tech overall in order to reallocate their portfolio, that can create a situation where rather than selling tech and buying something else at the same time, they just keep selling tech. Or if they're clear enough on the tech positioning, instead of selling tech and buying something else, they're just buying something else. While we're in the middle, I can just look for individual trends. And then if we get to new levels in the 10-year yield and that adjusts investment theses, that can actually shift this market all over the place a little bit more. So I like consolidation in this range, but I have to keep watching it because if we get too high or start to fall, that could be a sign of something. The big boy of the room since the election has been Bitcoin. And lo and behold, every day it seems like we're getting a new high. We had a little consolidation period and then a push through massively high RSI. The market is looking for the seller. It hasn't found it. Profit takers aren't taking profits. Bearish Bitcoin people just don't seem to taking here. But then we just push to new highs. It's overall a very bullish trend. What I don't like about it is that RSI. We haven't had any dip, and that can create big liquidation potential. That said, there are Bitcoin-related names that can be traded. They generally had poor earnings. So I've got this balancing act of past performance for these Bitcoin related names, these crypto related names, was not necessarily good. They didn't guide high enough to justify a fundamental buyer at that point at their earnings announcement. But if we keep pushing Bitcoin, it seems natural that we're going to go to 100,000 at this point. It's just a big round number that the market wants to see what happens. If we get to 100,000, does that create more excitement into the marathons, the riots, the BitDeer or whatever it's called, BTDR? You know, we've seen massive excitement for MSTR. We've seen very good excitement in Coinbase. I think those are natural, but I want to know if Marathon, Riot, and some of these other very niche Bitcoin crypto related names can start to participate a little bit more here. And we'll look at the charts to give us some indications on that as always. Since we got about a minute to the open, I'll do VIX on bar chart before we get into some of the individual names that we're looking at. The VIX right now down very slightly. That's actually a little surprising to me. I thought that this small, and that may occur throughout the day. We may see a continued drift lower in the VIX. If the market rejects this bounce from yesterday and initially today, then the VIX would justify continuing firmer. Otherwise, we may just see this kind of drift lower. And again, there may be some just concern of preparation for what happens if NVIDIA is bearish that is holding the VIX up for now. If we do start to find bullish behavior overall, particularly in tech, I expect to see the VIX down 13, maybe lower. We get that overhang behind us, and then we're down to maybe just the geopolitical risk for now. But SKUDEX is, I got to do the dollar sign. You know, initially SKUDEX is looking slightly firm this morning, apparently. We don't have any real flow here since we're right at the open. We just got to watch this throughout the day. If I see VIX down with SKUDEX up, it means that people are selling put spreads to find risk, saying they want to buy the dip, but they don't want to have uncapped risk. It's to more people actually willing to naked short puts. And that would be an indication that the market is A, more confident in the upside, B, more confident that the market can drift higher, but C, it's going to create a situation where the market has less protection to the downside and could increase the liquidation, the tail risk scenario. Right now, I don't believe we're in that spot. It looks like SKUDEX is generally holding up okay. So with SKUDEX generally firm, the VIX slightly higher, the market looks like they've got some protection in case of a pull down. And that helps reduce some of the risk of major liquidation, as positioning shouldn't be completely off balance right now. So as we see in SPY, you're now completely unchanged. Pre-market was up small, right now unchanged. If we get above the high, that just starts to set the tone for the day of potentially moving towards 595. It may take the majority of the week, and it really may take NVIDIA earnings to start to push towards that 600 level again. But it looks like 600. So that's one of my price targets for this week. Just getting ready for my weekly trade thesis for where we go on expiration. There's a very low probability of getting above 600. Right now, the options are only a 10 delta call, but that seems like a natural target zone if we get bullish NVIDIA earnings. Bearish, I start worrying about potentially down to 575. So very dependent on if any shifts come in the geopolitical force or in NVIDIA. Moving over to tech, since we're talking to NVIDIA a little bit, and it's a big focus for me right now. Tech is generally a little bit weaker than the broad market. We didn't explode to new highs. We know that the market was really reallocating from tech to small caps. Sorry, would you say weight 5, John? I'll let you clarify on that as I kind of touch on the charts that we're seeing right now on the tech. But, you know, we're seeing tech kind of consolidate here. It seems natural knowing that we've got the big earnings this afternoon. Semiconductors have been weak. If NVIDIA earnings are weak, we are really looking dangerous in semiconductors. I mean, 219, 215. very big downside risk if NVIDIA can't drag up the sector. On the bull side, 261, 262 looks like some resistance points. If NVIDIA has an outsized move on earnings, that can shift that very quickly. Right now, we're sitting around 145 in NVIDIA, very close to the high. So the inflection looks a little bit more like there's that potential for explosiveness to the upside, since we have very limited resistance around 150. The normal move size in NVIDIA is close to 10%. So 10% puts us at 160. $5 would be only about 3.5%. We rarely see moves that small in NVIDIA. We saw a little bit of it at the end of last year. So I'm preparing for this to just have a clear move to the upside. If it's bullish, that may surprise the market. I don't know that I can realistically predict a small move to the upside, other than the fact that there is that resistance at the 150 line from the previous high. The downside, maybe there should be some support here around 130. 130 to 135 would be the normal move. We normally see, like I said, 10%, and that would be around 130. So 130 would be a interesting target point. I will note, though, that the bit higher here at 135. With earnings normally being around 9%, technically not 10%, we'd be looking just above the 130 line, very close to that previous support. We could see an outsized move to the downside if it's bearish, since everybody loves NVIDIA so much in terms of the general talking heads here, and because it's still sitting at the highs. I mean, when I compare it to like Micron, we haven't had strong performance by any means. Semiconductors, SMH, have not had strong performance. We know Intel, this past earnings was okay, but the prior was so bad. If NVIDIA starts to join that party, I am concerned about the downside. Traditionally, I would probably look for something like a 130 downside. And if I'm going to go symmetrical for completely neutral risk, I'd look at this 160 or 162.5 line for some good open interest there on the upside. Right now, our biggest open interest is 150. I just don't see a reason for that to hold outside of the technical picture. From the earnings analysis, it looks like that should be more of a launching point for the upside to the 160, 162.5 range if we are going to go. A double fly would be 130, 160. But I gotta think that this could be a little bit like Target, in that this could be a multi-standard deviation move if it, on this particular earnings cycle. And that puts some pause to me on the trade itself. And I see a Target now getting down towards 125, becoming less and less likely for me to look for a pin strike. 130 had some open interest. We're starting to get some more action here at 125. In 2 years. If I go out 5 years, there's only one move bigger back in 22. I don't love anything about this. We are below all of our main support levels. Over the last 6 months, we haven't traded down here. The next real support I can see is like 110. I don't want to trade for another $15 a downside with any sort of confidence. I'm more inclined to look for a butterfly targeting that 135 range if we start to bounce back, but we're not showing any signs of buyers here yet. The short is holding, the long is still liquidating. 135 would be a much more natural stall point if we start to see that positioning get balanced and the shorts looking to start to buy back in, and or people start to bet on a Santa Claus rally. So what I'm looking at here for Target is basically nothing, unfortunately. But I do think it's important to note how weak they came out on earnings. The other one that had earnings that we were looking at last night on the close is TJ Maxx. So they beat, but their guidance wasn't high enough, I guess, to really give that support to the market, at least not yet. Overall, a pretty muted response. I was looking at like the 116 on the downside, 123 on the upside, and we ended up moving less than 1% here with the mixed bag earnings. You can see over the last 2 years, the average move is around 2.5% over 5-year period. the norm is pretty close to 4%. And today we're about a quarter of that. So a very small move. And I'll just wait to see how the digestion occurs here. If we start getting towards the highs of the session, then this starts to look like it wants to go to 122 and maybe pin there for this week or next. And that could be an interesting small trade target. It's such a small move that there's not going to be a huge amount of leverage in it. But overall, I'm expecting to see the implied volatility in TJ Maxx get down here towards the lows, 14%, that expected daily move, less than 1%. If earnings can't move the stock, there may not be much to do with that. So overall, it looks like a potential grind higher if the market decides to just jump back into it anyway, in spite of the mixed bag earnings. But this could ultimately be similar to Home Depot, where it looked decent and came down anyway, and then just basically consolidated. So didn't press the highs, didn't really bounce back all the way above the post-earnings high. Just a kind of ho-hum trade that's really built for calendars or butterflies looking for very muted movement. Okay. So few ideas that are in the active trader portfolio for today. Visa. So we're still seeing financials showing signs of potential strength here, looking like entry points. Again, this is about market portfolio concentration for me as much as anything. Visa looks like one of the best in the bunch right now, pressing against those highs. Small pullback today. I think it could be a reasonable looking add, but if I've already got other financial names, it's not necessary for me to come in and add too much. As I mentioned yesterday, I added Morgan Stanley yesterday. Morgan Stanley started looking a little bit weak there at the close, but a bounce back here, showing support around 132. Still looks pretty firm. If the Trump trades continue, which has been very focused on financials, Morgan Stanley looks like similar overall on the financials. Simply going into XLF could be a way to eliminate some of the individual stock risk, but Morgan Stanley, Visa, Schwab, they all kind of show very similar bullishness with the overall market construction right now. So, excuse me, I was just chatting with Vlad. Let me pull up my aggressive power trader stuff. We were having a little bit of a technical issue this morning, but those are posted now. We've got one other one that was mentioned here, Alaska Airlines, another sector that is their post November 6th. Alaska, Delta, United, they're all in very, very strong shape right now. United looks like the best in the crew. The rest are lagging it a little bit, but overall look pretty strong. I do like American Airlines. I like Alaska Airlines. Delta could be interesting. United is definitely showing signs of being the best of the crew right now in terms of what people are buying into. More so than, Love or American Airlines. I mean, Love actually looks relatively weak here. Frontier looks particularly weak post Spirit Airlines bankruptcy. That's a red flag for the discount airlines. ALGT actually pulling back here. I don't know, is Bob on? I know that was one that we had been looking at a bit over the last few weeks, but for now it looks like we're just seeing a little bit of concern over the more like the regions and more concentration into the quote unquote good, big, established airlines. So I want to keep that in mind. If Delta and United and American start to explode higher, it may start to put that much more interest in the Allegiants, the Alaskas, the Frontiers. And I think airlines can be another good seemingly safer allocation of capital right now for my portfolio. So like financials, airlines, they just don't seem to have that major downside, barring a new fundamental input. And we're generally beyond the earnings and stuff here. So, what could that input be? Maybe oil prices, maybe just a broad economic concern, but that's not there right now. So I always have to be aware of those potential risk factors coming into the market, but I'm not worried about them today other than just keeping them in the back of my mind. Tesla, we are setting up for now that potential leg higher. We're basically creating a very steep ascending triangle here. Hard to draw when we're so close to the highs sometimes because the other little indicators come in here. But as we press towards the highs of November 11th, Tesla could then start to get that much more momentum. So the buyers are getting more aggressive into these little dips. This dip was starting to look a little bit more dangerous until we gapped higher. So here, after the gap, if we had just had a more normal bull flag where we drifted above this level, then I could bet for the drift higher. But from here to here, such a small distance, I'd rather wait for a new high before expressing a view in Tesla. Really, ultimately, the 10-day moving average, if we get below 328, 330, call it, it starts to set up that potential for a move down back towards 300 or even a little bit lower. And then up about $10, I can start looking for the new highs in Tesla. But we're in the formation of the pattern setup right now for Tesla. So above 350, I get bullish. Below 330, I get bearish. In between, I don't want to touch it. I just want to watch those levels. For Tesla, we do have implied volatility in the mid-high point of the range. The options are thus very expensive. Not just on a price basis, but on a implied volatility basis, they are high relative to their normal level. Volatility is very high because of the reaction to the earnings. That should start to drift down as we go through this consolidation period and suck down some implied volatility from the market and cheapen up these options a little bit. So certainly right now, if I start looking for a trade, it's going to be spread based. If we get above 350, that means I'm looking for like a 350, 370 call spread. Currently $7. That would appreciate certainly on a $10 move by about $1. So instead of $7, I'd be getting in closer to 8 on a 20 wide vertical. If I get in around 8 and look to sell it out around 15, I can still double my money, but I want to do it when the probability of the upside is stronger. Right now, it's a little bit of a mixed bag of being into the market. And yeah, I mean, right now the volume and everything else, it's not showing that sign of continuation to the upside yet. But above 350, the market may start to get excited again. And that's where I'm looking for some signals here that there is further upside. We had a very wild, drastic move here. Good bullish earnings, the pullback, the explosion starting on November 6th. Now what happens next? That's where the market is going to fill in that information for me. It may take a couple of days to get to 350 or to 330 and give me that real clear signal. For now, it's a little bit of a waiting game, but overall, I mean, I don't know that I see a drastic reason to bet against Tesla, barring the market starting to bet against Tesla. We've had little profit-taking dips and then other value buyers just going back in anyway. So we'll see if that can continue or if this is just kind of a watch list idea that ends up going to, the trash can and deciding to move on with other names that have more exciting setups at the time. So right now, not necessarily compelling, but I got to watch my levels to see if they become more compelling into a real move from here. And I already touched on Visa, so let's wrap up the earnings ones before we go to other market movers for the day. Palo Alto Networks, normal earnings move is about 7.5%, 8%. So about $30. $30 from here on it is 355 on the downside. Right here with the lows of November 4th, that looks like a decent support level of 357.5 to 355. $30 to the upside is 415, so just above the prior highs. I'm inclined to look at this from a options open interest perspective, as always. Excuse me. There's not a huge open interest here, so we don't have a natural magnet, but there is some interest growing for today. Looks like maybe 355, a little bit more interest at 350. Good open interest here at 420. So if we get that $35 move to 420, I could start to look for a basis here of 420, 350 double fly, or 420, 355. That's $32 down, $32 up from exact current prices. As we digest and move around throughout the day in preparation, that may shift the downside target a little bit, but I think 420 looks like a pretty good target on the upside here for now. With a $400 stock, I'd like to be at least $10 wide on the flies, so 410, 420, 430 on the upside. Maybe even 405, 420, 435 to widen my profit window. And then just going symmetrical to the downside in order to reduce my up-down risk here overall. Since I have zero fundamental bias on the direction here, it's all going to be about technicals and option structure. But 420 is the big key for Pan W, and then symmetrically creating the double fly based upon that to the downside, whether it's going to be a 355 target or 350, leaning right now towards 355 in particular, because that lines up really well with this low where we should have some good support. But if it breaches 350 to 345, starts to look like the next support level. So 355 is kind of the upper band of that, given the normal earnings move. Baidu is pretty unclear to me, unfortunately. Historically, it's pricing in 5%. If I go out 5 years, 3%, pricing in, the average expected move of 6%. So the market is starting to digest this concept that it moves a little bit less than it did in years past. That doesn't necessarily set up well for an earnings play, expecting smaller than average moves. If we get 3%, we're only talking about $2.50 to $3, 84 on the downside and 89 on the that interesting in the options market for Baidu right now, unfortunately. So I don't want to spend too much more time on Baidu. It is not a big, strong earnings setup for the normal double fly. Similarly, Pinduoduo, we have had 30% moves. We have had the norm here seems to be around that 15% absent the last three. We go two muted moves and then one big move. If I shoot for 15% downside, that would put me between 100 and 95. 100 is a good big round number. Pairs well with 130 here, given the resistance levels that we've seen in that range. So there is a okay possibility of targeting 100 where there's good open interest, targeting 130 where there's good open interest. But there is some here at 125 and 105 as well. So it's a little bit questionable overall, especially given the magnitude of the moves that we've seen recently. The more clockwork style earnings that we've seen is in John Deere. It just ends up 4 or 5, maybe 6%, 4 or 5, 6%. So anywhere between 16 and $24, really targeting that $20 move. $20 to the downside right now puts us at 385. $20 to the upside puts us at 4.25. Depending upon the movement for today, we are up $4 from the 400 level. It looks really good to shoot for 420 and 380. Pretty symmetrical there. 420, and I mean, there's no open interest really in the options in John Deere, but 420, 380 looks kind of interesting. 420 now would be a smaller upside move, and I'd have to go to 385 or 390. If we drift back down throughout the day, looks like 380 and 420 again. If we drift up, it probably becomes a non-trade. If we go towards the highs too much, maybe I could look for 385 with 4.25 and with a new high here. But I want to see where this is going to settle in pre-earnings before I make my ultimate decision on whether to go into John Deere. I like it, but if we get too high, if we get too much buying today, then that might wash out the concept overall for me. So it's not an open interest basis play. It's a technical and a repeated earnings move of 4, 5, or 6%. Anywhere between that 4 and 6% range just seems like it is a very repeated earnings move. And that's what I'm really thinking about as I go through John Deere, is that we don't have these major outlier 10%ers. We don't have 20% moves. We've just been, over and over doing basically the same thing. If it's bullish, 5%. If it's bearish, 5% to the downside. And that can be a little bit more predictable and help me set up my butterflies as a result. So as we set up our range for the day and tighten up these markets, John Deere, I think, is the most potentially interesting because of that repeated magnitude of move. So that's where we got on the earnings. Some of the movers today, let's take a quick look. Target, of course. Target is hitting Dollar General. Over here, these are further downside, discount retailers. Target is obviously a step above them, but the discount retailers are not happy as we see Target getting hit this morning. If they cannot find support and if Target continues lower, that could be a problem. They are trading correlated. They do have their earnings at the beginning of December for Dollar General or for Dollar Tree, as well as Dollar General. We're getting to that point of breaching support in Dollar General. So if I continue to see Target liquidate, there may be a play here. And we're down to 120 now. If this continues to liquidate, there may be a play set up for playing for some liquidation there with some short-term options. So outright puts, the normal move here is around 35 to 40% implied volatility. And you can see the 30-day, which has earnings, is in the 80% range. But the next 2 weeks, I can go into next Friday's options at a much more reasonable implied volatility of 42%. And just look at maybe some at the money 73 puts for a quick hitter for a couple of days, looking for Dollar General to drift down off of the Target correlation trade. TJX is starting to get hit a little bit more today. So now 2%. So maybe it will hit that downside target with a normal 2.5 to 3% move. It seems to me like there is a concern overall brewing somewhat in the retail names here. XRT is getting hit for sure off of this. It seems like it's only 1%, but now we're below yesterday's low. We've already had a pullback for about a week. This is just a chopping trade. I start looking for XRT to find a bottom though, because that Santa Claus rally does normally have some decent performance. Starting, around now, but the technicals right now say for me not to buy right now. As much as I want to be in it, and as much as I would have been much more inclined to be in it last week, now this is saying hold off for a few more days and reevaluate at a later time. There are some bright spots inside of retail though. Restoration Hardware looking pretty strong here. We had the pullback yesterday, setting up a nice bull flag, and then today, nice continuation, traded above the November 7th high. that could drift towards 360. So there are still some stock pickers out there. Restoration Hardware may be moving too much, though, too fast for me to try to jump on for now. Wayfair, I'm pulling back into this and starting to think again about that 55 target again. Before, a few weeks ago, I was looking at this with a Jan 45-55 call spread. That seems like the potential play here again for that end of year rally. This is, obviously an online retailer, discount retailer, and maybe that's where Target is actually finding their weaknesses, that the online retailers are taking the market share away from the in-store that they are more focused on. Target has a lot more sales going on, it seems like, than normal, and maybe it's because of Black Friday, or maybe it's to try to drum up some more interest in their brick and mortar and online sales situation to try to help get them back on track here and compete with these online retailers. But I like the way that Wayfair is setting up. And then ultimately what I'm looking to be concerned with is if we start to repeat something like we saw on the election, where we started to make the comeback and then we broke back down and set up a bear flag instead. We had a nice consolidation period near the lows, so we have good support at 37.5. That should create a little bit more confidence for the bull this time. The downside support here was a little longer ago, back in September, but we break below 37.5, and now showing that rounded bottom action. That means maybe the time is right now, even though I was too early when I looked into it at the beginning of November. So that is actually one name that I do like here, and I'll make sure to have, barring a drop back below about 40.5 today, I'll make sure that I've got the 45-55 call spread again on as we do start to see some buyers. I looked at Amazon this morning. Amazon slightly weak. So Wayfair seems to be, for whatever reason, the name that people are buying into. Chewy actually is also looking very strong here. Jumped above the prior high, drifting back down a little bit just below the prior high. Excuse me. There we go. So just below the prior high, but we are overall setting up a little bit bullish in a couple of these digital retail names, Chewy, Wayfair. And in fact, Chewy may be worthy of a trade here as I think about this more. 50. It's a short-term trade because of the earnings in 2.5 weeks. So we've got to get above this. Let's see, maybe just staying higher probability with like a 34.5 call for next week. Sorry, one moment here, folks. Got to double check something. Yeah, okay. So if we do see Chewy buyers here, like a November 34.5 call looks pretty decent. I'm looking for that to get back here into that firmer positioning, as long as we continue to, we don't see too many more sellers today with this new high outside this, whatever happened on June 27th. The 34.5 calls could be an interesting way to express that view for effectively a 1-week trade, just in case, because again, I don't have an edge on the earnings. So using the November 29th options can give me some leverage for a 1-week type trade here. Welcome. Woof. This does not look very good here as we're breaching some major support levels. The August 5th low is about the last level left. If I go to a longer term chart, below that support looks pretty dangerous. Oh gosh. Yeah, let me see this a little bit cleaner here. Implied volatility near the lows. There's no earnings. Oh God. I mean, some just outright puts for December don't look bad in Qualcomm, given the current setup. Maybe even going out a little bit further into January to give myself more time in case there is a little bounce back after today's 5% move. 5% is a fairly significant move on its own today. But there really was no immediate buyer here in this market. In fact, we're just getting continuation selling after it looks on the bear side. So somewhat interestingly, we're seeing a little bit of bullish on, financials, airlines, and a few online retailers, and bearish in the lower end or retail like Dollar General, Dollar Tree, the discount retailers, and some semiconductor names like Qualcomm again. Micron starting to show weakness. Apple a little bit weak. AI dipping after yesterday's Microsoft news. A lot of very interesting follow through to yesterday's trade. Gold is starting to go a little out. I'm looking for a bear flag for gold to the downside. Continuation, I'll go for silver instead. So if the dollar starts to weaken, I'd look bearish. Or sorry, if the dollar starts to weaken, I'd look bullish silver. But right now with the dollar strengthening, I am inclined to look for bearish gold on a rollover here. So as a reminder, I have the 252-247 put spread for December in gold. I'll look to rotate out of that once we start to see the bullish behavior waning. So back below about 243.5, today's low, is when I'd look to rotate that position. So getting rid of the 252-247 put spread and start targeting again a 235 price point via 240-235 put spread. And just to keep myself with time, a 240-235 put spread is trading around $1.50. That's decent in terms of the leverage. Just as a comparison point, the in the money put spread from before is up to about $3.50. So if we start to push down over the course of the next month back towards 235, that could very easily be a nice double, and it helps balance out my probability of success because in December options, I've got to get that move much more immediately. And if we do see a little bit of a wiggle to the upside in gold first, the January option, the January put spread can decay a little bit less and still have that possibility. So adding a little bit of time does seem like a logical structure here as long as we start to see that weakness. And right now we're just not seeing the weakness yet. So as soon as I start to see that weakness, I'll look to rotate. The upside right now looks a little bit muted. Should have some serious resistance around that 247 level. So I don't mind staying with the 252-247 put spread. But if something significant changes with the dollar, that can certainly change the thesis there pretty quickly. All right. And let me go back down to the sector level. So XLP down, XRT down. That makes sense for Target. Jets actually getting hit a little bit today, even though we're still seeing some strength out of United and Delta. On the whole, semiconductors slightly weak, and not a ton else really moving much today. So we're starting off pretty muted, preparing for NVIDIA. Forgot to look at the Bitcoin related names, but we are seeing that nice bounce back here for Marathon. So bad earnings, but strong Bitcoin. I said yesterday, I think like a call spread targeting 23, maybe a call spread targeting 26 is in the cards here. I don't know that I want to bet for a new high, but I can go into like December 22, 25 or 22, 26 call spreads relatively cheaply here. And if we explode higher, I just make a little bit less money. There is decent open interest here at 25, so I'd probably lean towards a 22, 25 call spread. It's about 70 cents right now, 75 cents. That's not by any means. With Riot, it started off so strong this morning with Bitcoin rallying and then pulled back entirely. I want to see this back above yesterday's high and back towards unchanged on the day. Sorry, back to the opening price of the day, not unchanged on the day, back towards this morning's opening, to look for something here to retarget 15.5. So again, because they've had some weak earnings, there are, I think, some questions about whether a strong Bitcoin is enough. There's decent open interest at 15. Then the next big level is 20. A simple 13-15 call spread for 50 cents into a rally does not look like a bad way to express a bullish Bitcoin view, with Bitcoin potentially looking like it wants to push to 100,000. All right. Yeah, we should look at XLU. So we've had a nice bounce back in XLU. It was starting to look really bearish. Now I'm wondering if we're just kind of forming out a new bull trend here after this chop period, where utilities become a bit of a safe haven. If interest rates aren't going to explode higher and TNX is going to hold with the yield below 3.5, seems like there is still some interest in getting into XLU and the good dividend yields that generally come from utilities. So overall, utilities are looking okay right now. That's a somewhat boring trade, but boring trades can sometimes be some of the most profitable trades. I mean, if I look at NEE, which is the biggest holding, it had a very wild pullback that I think scared the market a bit on the utilities names, especially with poor earnings and then big follow through to the downside. But if people are now willing to forgive the earnings from a month ago and focus on the forward projections and start thinking about earnings that are going to be coming in 2 months, maybe there is some justification here for a little bit more in the utilities. Duke has been one that often pops up as an interesting utilities name, Duke Energy. So got to keep an eye on those. I think with this and change level, so just above 114 starts to set it up for a move to 120 utility. Going to a Jan here, targeting 120 would just be like a 115, 120 call spread, $1.80, $1.90 range. That would still be a double in this name. And with 16% implied volatility, it's not overpriced options by any means. It can get down a little further towards 13 or 12.5%, which is part of the reason for the debit spread. Additionally, of course, as I mentioned, we do have that resistance above. So if I've got volatility falling, it really pairs well with a debit call spread with my short strike at my resistance level in the stock. All right. Ooh, more tech weakness coming in here this morning. So seems like the market's worried about NVIDIA, and maybe that much more worried because of Target just not showing any buyers here near the lows. So we're seeing some definite risk off after what looked like it was going to be a muted morning. We're going risk off for now. But, like I said, we've got a fundamental input this afternoon that could certainly shift that or accelerate that downside. So, a little bit ho-hum on the day. I'm going to try to stay away from tech on the broad scope and look more at some of these names that have less correlation to NVIDIA earnings. And I think that's where the financials, the airlines, and things like Chewy and like Wayfair could be of particular interest. All right. If anybody has anything else, I'm happy to take a look at a few other ideas here. You can pull up China. Certainly. That's just hanging out okay. Nothing really interesting there. EWW, Mexico had been hit off of the election initially, then bounced back and now testing support. So again, a bearish looking setup. We had the bearish bounce, retest the lows, bounce, and now retesting the lows again. EWW could be setting up for a outright put if we're worried about Mexico return potential. I wish these options were a little bit more liquid. If these markets tighten up, I'd start looking at some put options here, but as it currently stands, the market makers just aren't very interested for the moment in the Mexican options market for some reason. It's a little bit better in December. So maybe going into like a December 50 put here in December, I can get a decent enough liquidity at 23% implied. You can see that January, because of the width of this, these are not dollar options. Obviously, if this is a $1.60 put, this is going to have a premium to that of maybe a dime. So these should be about $1.70, something in that range. Oh, sorry, no, a little more than that. Maybe 30 or 40 cents. So these should probably be about $2 puts. So the bid just makes that midpoint very difficult to predict, but it's probably closer to the offer in terms of the valuation than the bid. Maybe I can get lucky with somebody that just misfits their portfolio. If I put in like a $1.70 bid, something in that range, I get lucky on a fill. But for the downside, I do want to see prices below 50.10 and then start pushing down here towards 48.5 or 48. And that is a small winner here with these 50 puts. Ooh, what is MSTR doing today? Yesterday it was skyrocketing. Today it's skyrocketing again. This is just a very hard trade for my trading style. Very similar to Bitcoin and the 83 RSI. With Bitcoin firm, this is one of the big winners in Bitcoin. You can see that pre-election on this move in Bitcoin. It's going to be a very much just, when I'm trading MSTR, I'm trading Bitcoin. The options have exploded in terms of their premium. God, for me, I'm thinking if I can find a good support level, is there enough premium to buy a deep in the money call spread, like a 370, 380 for $7.50? Seems like a pretty high probability that we stay above 380, barring the collapse in Bitcoin. So, I can generate 20 to 30% return on that in a week. Of course, I'm risking more by going far in the money and having a less leveraged trade. But I think the in the money call spread concept just makes more sense for MSTR than trying to buy like a out of the money collars a contract. I have to go all the way up to 540 strike right now. And we may achieve that, but we're in that parabolic type move right now. And for me, on the call spread here for $7.50 to $8, looking for 20 to 30% return by just staying above the strike for the week. So it's just about trying to find that some of these potential support points in case of a pullback. And ultimately, if we do pull back, we may come all the way to 350. So if that is the concern, the 340, 350 call spread is, $8.50. I can reduce the risk, but reduce the reward there. So I increase the probability of success by a little bit, but I reduce my return by a fairly significant margin. If I have to pay like $9 to get in that call spread or $8.80, I'm really only looking at a potential 20% return. And even if I increase my probability of success by 10 to 20%, I don't think that's enough. I have to be confident enough, I think, to take the risk and go into the 370, 380 call spread as a good probability of success, but know that there is some risk there. So I don't, from a stock perspective, I don't have good, strong opinion on there. I mean, if we go red on the day, that would be my red flag. obviously red, going red on the day would be the red flag. If we stay green, then I can hold and then just use a trailing stop of basically a red day, and then wait for consolidation for a few days so that I don't feel like I'm on, walking on eggshells trying to figure out whether these pullbacks are going to cause further continuation. Then just wait for the next wave of buyers to come in. Because if this had gone the other way and I was long, I'd be taking a big loss. It did ultimately continue. So buying in when we start to show the strength is easier than buying when we are spiking, or buying, when we're testing the lows. Right now, there's definitely enough interest, though, to say that I think that there should be some support here, as long as Bitcoin doesn't collapse. And I don't see a reason for Bitcoin to collapse outside of positioning. So if people start to panic sell because we get below 85 or 80,000 bucks a Bitcoin, that would be a concern level. But as it currently stands, it looks like Bitcoin just wants to go up towards 100, and that should keep MSTR from collapsing. Well, we'll kind of see how it plays out today, preparing for that NVIDIA earnings. Maybe with the market pullback, it can help set up the John Deere earnings trade that much more clearly. If this dips back or stays in this range, I think 380 and 420 are good levels. Maybe into 385 and 420, with the normal move being anywhere from 4 to 6%, and then the technicals saying 420 on the upside and 387.5 down towards 380 on the downside. It looks intriguing to me. So if there's anything else I can touch on here before I jump off, let me know. But I think we've got some okay setups. And tomorrow, I think we'll have some more clarity once we've got this NVIDIA earnings behind. Open up the investment and the trade thesis for tech, an input in such a talked about stock in the tech sector. ASTS. Yeah, let's take a look at it. Spacemobile. Just consolidating here. My support is 2185. Resistance at 30. Earnings were bearish here. It's the implied volatility at 105. This could be an iron condor setup. Let me see if the options are enough here to do something with like a 1 week iron condor to stay between. That's not enough premium. Selling the 2220 for a quarter and selling the 32 for a dime. I'm not sure there's enough premium to doing an iron condor where I sell the put spread and sell the call spread. Maybe if I get into it, this might be better suited just for day trading in stock. So in the very short term here, after the last couple of days, we've had these dips on the open and then bounced back throughout the day. We had buyers basically after the open the last few trading days. So I think the lean would be towards looking to buy using the day's low as the stop and exiting near the close. And really it's by noon, we get towards the highs of the day. So if I'm looking for a very, very short-term day trade, I think maybe buying in around here using about a 30-cent stop, looking to make about $1.20 to get back towards 26. And I think that's just how I'd kind of play this one for a very short-term stock-based trade, nothing with the options, until we start to see movement closer to the real support levels around 22.5 to 22 range, or real resistance around 30. So just, taking advantage of this little bit of flow within the day. Yeah, let me take FDX up here real quick. So market is pulling back FDX. Yeah, it's very low volume. Let's see how the dailies have looked there. Very low volume. For magnitude of sell. So I would basically here on a like 15-minute chart like I've got right here. Once I see a bar that is more bullish above the previous bar's high, that's when I could look to buy into this. And looking for resistance around 300. So it's not a huge move in the short over the next, maybe even by the end of the week. And let's go next week, give myself a little bit more time and look at like a 292.5, 300 call spread for might be 220 or 230 at that point. And as it gets towards $6.50, if we go towards 300 into the mid to late part of next week, looking to exit at that point. If I wanted to get a little bit more of a long-term positioning, I can still use those short-term charts to find my timing. But I go into Jan and I start looking at 310 as my target instead. And it's just like a very simple 300, 310 call spread. We may stall for a bit at 300, so I don't want to just be outright long calls here. But yeah, I think that there's still a good potential for that to go higher. I think I was looking at 295, 310. Sorry, I was looking at the December 295, 310 before December 13th. I think I'd add at least a week or two, maybe go into the end of the year 295, 310 in order to get that $5 strike if I wanted to be in the money on my trade right at or slightly above $300 a share. So right now the December 27th 295, 310 is going to be about $5, so I'm breaking even at $300 a share. But I'd say if anything, I want to see that first buyer step in after we're getting down on low volume, because that low volume selling could turn into high volume selling if we start to breach some bigger levels here that are starting to get into focus. If we get below like 288, we may start to see some sellers, certainly below 285, and then that means I got to wait more for a bull flag. I wouldn't be surprised to see a bounce back here, just given the volume, like you mentioned, Fred. But I get into it. Maybe it's just a lack of buyers generally in the market. It means that these small sellers are giving a bigger push than we would normally see for FedEx. I don't see a normal pattern though of like start weak and then continue strong. Yesterday we started weak and then bounced back. The day before we started unchanged and had some bounce back. The day before we were strong and then weak. There's not really a huge clear flow there on any of this. Just might be that we are for the day not seeing any aggressive buyers. So I got to wait to start seeing that buyer come into the market to prove that it is okay. And maybe it happens in 15 minutes and we start seeing prices above 290 and then it's good timing for a long there. All right, folks, I better jump because I believe we got another call here in about a minute, but hope you guys all have a great trading day. Get ready for those NVIDIA earnings. I think those are going to be important. And just a quick note, precious metals, silver now down on the day. Gold not participating in that. So I've got to watch for that. If silver continues to get weaker here, that might be a predictor that gold is getting ready for its break. So we're definitely stalling here in silver. And I got to watch gold for that downside play for 235 now. All right, thanks again, everybody. I'll see you tomorrow for the closing bell. Hope you all have a great day today and tomorrow.